Our short bearish trade on Herbalife stock, ticker symbol HLF, has now made 100% profit. And we started to manage this trade because we found a new unusual trade on the last trading day, January 31st, as the stock fell to a new low. And what's also very unusual about this trade is that Herbalife reports earnings in a few weeks on February 19th. And so in this video, we will share how we updated our short bearish trade on Herbalife that we entered when we initially detected those previous unusual trades back on August 7th on this day when the stock was trading at about $9 a share. And so you can see that ever since then, the stock has fallen 40%. And so this was the video that we shared with everyone when we analyzed those put options that were shorting Herbalife. And you can see that the stock never went above that price level. And so this was a very good short position, and why we analyze the unusual option activity to gain deeper insight as to how wealthy investors such as Bill Ackman are trading. If you missed this video, we'll put a link at the top here where you can learn more on how we analyze their trades to make better financial decisions. Because as we all know, the rich get richer. And so if you missed this video, make sure to subscribe and hit the bell icon so you don't miss out on these very profitable opportunities. And so you can see that these unusual options that we analyzed in this video are now very deep in the money. They expire February 21st. And you can see over here our position at the 10 strike puts still here, but we started to update it because of the new data and because we have earnings coming up, which is higher risk. You can see how much they're worth now, between $450 to $470. So we can sell these put options back to the market for about $460 at the mid price. And how much did we initially buy these for? Well, if you look at our profit loss graph here, when we analyzed this trade, it was $230 each. And so because they're worth $460 now, we subtract by our initial cost of $230 and we get a profit of $230, which is why this profit loss graph here shows that it is indeed $230 of profit, which is 100% profit, since we divide profit by the initial cost times 100 for a percentage is 100% profit. And so this is another real example proving how we keep winning with our data analysis. So if you're sick and tired of losing consistently, witnessing losses after losses, or perhaps you're not losing, but you're not as profitable as you would like to be, then go to our website where you can gain access to secret trades made by wealthy investors with a higher chance of profit.
Visit www.unusualoption.com to join our membership and start your journey to a financial success with a partner you can trust.
We will put a link at the top here where you can gain access to secret trades made by wealthy investors with a higher chance of profit. Now, how did we manage and update this trade now because of the new data? Well, we started to roll our options to a new strategy because the new data on the options time and sales tape, you can see that there were 10,000 contracts being traded on January 31st at 12:09 for these January 15 options, 2027. So these are leap options that expire more than a year away. These are 12.5 strike calls for a price of $90 each. Keep in mind, we need to multiply options prices by 100 since each option represents 100 shares of stock. And so the total trade cost is 90 times the 10,000 contracts, and we get $900,000 on this trade. And if we analyze this trade even more, we can see here on the option chain, these January 15, 2027 options at the 12.5 strike calls, clearly opening trade since the open interest is only at 5. those 10,000 contracts being traded are clearly new opening trades and not closing trades, because it would not be possible to close out of 10,000 contracts if there were only 5 opened contracts. And so you can see we also started to get into the same position. POS stands for position, where we also bought these for the $90 each. And when we analyze this trade, you can see that this trade is actually the opposite of the previous trade. This is a bullish trade, because here on the x-axis, the share price, profit loss on the y-axis, as the share price goes up, this becomes more profitable. And we can confirm that this is a bullish trade, because if we take a look at the Greeks here, we have a positive delta trade instead of a negative delta trade, which would be a short bearish trade. And so what we started to do was close out of our put options and roll these to the call options. So we took profits from our previous trade, those $230 of profit, and we bought these call options for $90 each. We've actually locked in $140 of profit now. And so this trade is actually a credit trade, which means that we've actually locked in profits so that there is no loss. If the stock goes down, there's no negative loss. If it goes up, it will be profitable. We've locked in those $140 of profit by rolling our previous put options into call options now. That costs less than the profit that we made from our previous trade, so that we've eliminated our risk for the upcoming earnings. And so for the upcoming earnings, it is not very high risk for us because we've managed our trade by locking in profits already. And so if you want to learn more about our trading strategies, or you want to get access to better trade ideas made by wealthy investors, then make sure to go to our website. Keep in mind, this is a higher risk trade because we have earnings coming up, unless you also made profits from the previous trade that we shared. Make sure to watch this video if you missed it to learn more, because as they say, the more you learn, the more you earn. Let us know in the comments below. Do you think Herbalife will go up or continue to drop down lower after earnings? As usual, please hit the like button, subscribe if you haven't. Take care and have a wonderful day.